Hey guys, we have another week of down markets here to get us started. The word transitory inflation is back as the buzzword of the day, of the week, I should say. And we're going to spend some time on question of the week, talking a little bit about cryptos, why advisors may be hesitant to help with cryptos and, what they may mean for the future. My name is Brandon Steele. I'm a financial advisor with Mainsail Financial Group here in Bellevue. And our goal every week is to bring to you kind of the market news that you can really use, things that you can kind of take to your strategies and maybe implement and how you're kind of looking at things through these crazy times. Again, our question of the week here this week is going to be very interesting. We're going to spend a lot of time on cryptos. And if you have any questions for us, anything on your mind at all, please do reach out, send it to us. You can either message me or shoot me an email, whatever works best. If we end up using yours, I'd be happy to send a coffee, on me for asking such a great question. For those who don't already, please do follow us. We make sure to bring this each Thursday at 3. So if you'd like to catch this every week, follow us, and we'll be sure to keep bringing this to you as long as it's helpful. If you live up in the Seattle area as we do here, it's been quite the change here recently. It's sure starting to feel a lot like fall. I usually take like a morning or two and try and get a run in, and I can tell you lately that it's getting much, much harder to motivate myself to do. So I know us Seattleites tend to like this time of the year, but I don't think I'm in that camp. So I hope you are, and I hope you're enjoying the weather. But anyways, let's start out this week talking about the end of last week. So on Friday last week, we had PPI numbers come out. That's Producer Price Index. And the number was really high. It was 0.6%. This is kind of a measure of inflation. Right in line with expectations, excuse me. And it's very interesting to see how high this is, even with these Delta numbers and everything still going on. I mean, we'll talk a little bit more about the consumer side of this equation. This is the Producer Price Index. We'll talk about the Consumer Price Index here in a minute. But clearly, producer prices are still very, very high and growing. So very interesting to see, even as, again, Delta kind of slowed us down here a little bit. Before we get into the consumer side of that equation, I want to talk about another data point that came out on Friday. So last Friday, UK GDP numbers came out for the month of July, and they were way below expectations. It was crazy to see this. So they only grew at a 0.1% growth rate there for their GDP. So this is really important because for, the past at least 2-3 years or so, I feel like a lot of folks have been talking about having to have extra money in international and overexposing in international. All the target date funds have a lot of overexposure in international. And we haven't really been in that camp. We haven't felt like that really made sense. And this is exactly why. Now, I'm not saying international doesn't make sense. I'm not saying not to diversify, but that's been like the common theme for so long. And this is a good example of why we've kind of felt the opposite. So not to say that you need to throw the baby out with the bathwater here, but just kind of pay attention to this. I think this is one of the challenges that we face with so much overseas, basically, in our investing. And obviously plays a big role, especially with a lot of the target date funds having a lot over there. Fast forward to today. So again, let's talk back about the inflation side of things. So Friday, we had PPI numbers, 0.6%. Tuesday, we had CPI numbers, Consumer Price Index, at 0.3% versus what was expected to be about 0.4%. And all of a sudden, here come all those in the transitory camp. It is like the buzzword of the day, buzzword of the week. It's the hot thing here again to talk about. For those who don't follow us, transitory essentially is another word for temporary. So the Fed and a lot of, I shouldn't say a lot, some analysts have been saying that a lot of our inflation concerns are going to be temporary or transitory. And, it's funny to see that we're still, it's still 0.3% increase, slightly below the 0.4 estimated. And all of a sudden, here we go again, talking about transitory. So very interesting to see this. And I think it's expected. What's happened is with Delta, we've had this kind of slowdown in going out. A lot of us are not going out to eat as much anymore. People are staying in, maybe not traveling as much. And so I think that's what we're starting to see here. For those who do follow us, they might remember last week I mentioned that this is probably going to be slightly lower due to the Delta concerns and less travel and all that good stuff. So, I think this is kind of what we're seeing. In fact, some of this number really came from from non-retail sales. I'm sorry, from what's the word? From non-store retail is what I'm looking for. Sorry about that. So, I think it's just a different place that we're spending basically, and hopefully this should be temporary. This is a fingers crossed scenario here, because I am hoping that Delta starts to slow down and we start to get back to where we were a couple months ago. If that's the case, I imagine these CPI numbers will pick up here again as well. And I think this is really important to look at these two numbers. So we have PPI 0.6, CPI 0.3. And the question I might ask you is, if consumer prices are coming down, I shouldn't say down, growing less quickly, and producer prices keep going up, what do you think this might mean? What this might mean, right, is that producers are getting squeezed. Their prices are continuing to go up. Now, if the consumers are not going up as fast, what we may see is potentially producers start putting that onto the consumer. So I think that's something really important to watch. I don't know that I expect this to continue, but if it does, it is a important trend to kind of follow there. And then today we had retail sales come out. We had a huge number here, grew 0.7%. This number was actually supposed to be down 0.7%. So this was a huge, huge surprise. Very, very good information coming out there. Very strong number. And the reason retail sales is so important is because that figure makes up about 30% or so of our GDP. So, obviously a big jump in retail sales can mean a big jump in our total production here as a nation. So that is huge. Very, very big and unexpected number there. And most of this came from, again, non-store retail. So again, coming back to the inflation side of things, think back where we were basically before we were let loose again here in the summer. A lot of this came from things like online shopping, like grocery stores, things like that, as people back at home again. We also had initial jobless claims come out today. It was higher at 332,000, but I think this may be because of the storms, the hurricanes recently. So maybe not next week, but hopefully soon that should bounce back, but definitely something to kind of keep an eye on. And then coming up next week, we've got a lot of home sales data. We also have Fed Chair Powell talking on Wednesday, so pay attention to this. For those who are not familiar, he has shared that they may look at tapering, in other words, slowing their bond purchasing in January. I don't expect that to change necessarily, because especially with what we've seen here the last week and a half or so with the low market pullback, I think they're kind of watching that. And although technically they say they don't really care about market swings, it does seem that that is a factor in their, their analysis and what they're doing. So I don't expect a change, but definitely pay attention. Anytime the Fed talks, markets pay attention. It's like the biggest driver for everything lately, it seems. So keep an eye on that. And then we'll fast forward to our question of the week. So question of the week this week is why advisors might be hesitant to help invest in cryptos. And I think maybe to start as a baseline to answer that question, what I want to share is the way advisors work. So generally speaking, unless you have an old school advisor that maybe works on some sort of commission basis, most advisors may work as a kind of a percentage of assets or something like that they help manage. And the reason that's important is because what that means is that advisor shares in your success and also your risk, right? So if they are helping you invest in crypto, potentially a risky asset, yeah, they may grow with you if it does well, but there's also a lot of risk to them, just like there is to you. So the reason this is so important is that with cryptos right now, I think a lot of what is going on, up, down, sideways, whatever, with the price of cryptos, is it is very much based on speculation, right? We are speculating that cryptos may be used in some way in the future, some way that's used more than it is today. Now, the challenge with this is that the crypto itself is meant to be a currency, not necessarily an investment, right? Generally speaking, with currencies, once they find their price, they tend to flatten out quite a bit. So I don't know if that price is much, much higher than it is now, 100 grand, 200 grand, whatever. I don't know if it's much, much lower than it is now, 5 grand, 10 grand, whatever. That said, it most likely, if this is meant to be used the way that most people expect it to be or are investing it to be, it's probably going to find some sort of price. And when it does, it may stable out quite a bit. So I think that's really important. And also to think about how this may pan out in the years to come. So let's again assume cryptos are a thing for the future. We end up using them. They become what everybody who is investing in them hopes them to be. I don't believe that all cryptos are going to be around for that purpose. We have so many out there right now, and I think what will happen is similar to like the tech bubble back in 2001. When things start working their way through here, even if some make it, most of them are not going to. So we may be left with a few that are still strong cryptocurrencies, but a majority of them may fall out. Now, most people think Bitcoin, so I'm going to use that one because it's maybe the longest and one of the biggest that are out there. Just because that's the case does not mean Bitcoin is going to be the one that stands the test of time, right? So I think that's really important to mention. I think that cryptos can be very, very strong. Like they have shown that the performance can do very well. However, it's extremely, extremely speculative. And I think what we try to do anyways is invest based on investments and fundamentals, not on speculation, right? So that's where we kind of have a little bit of a rub. It's not to say we won't help you with cryptos. By all means, our clients, we help kind of talk through that and talk through their different options and help them if they would like, if they feel strongly to get invested. But we don't typically do that ourselves because it's not something that we really feel fits the portfolio. Everything that we have in our portfolios is there for a very, very specific and particular reason. Every single aspect of a portfolio has a purpose in the bigger picture for that portfolio. So I think that's the key to this. And again, it's not saying there's anything wrong with cryptos, right? You can certainly make a lot of money, or at least some folks that have invested a long ways back have, and it's possible that may continue. But it's also possible that this goes the other way. And so there's a lot of risk as inherent with this, also a lot of potential reward. But I think that is really the biggest reason that, advisors can be cautious to helping with that directly. Now, again, if you want to take a small portion and do it outside, most of the time we'll talk through that with our clients and, not shoot it down. It's just that it may not end up in their portfolios that we help manage directly, if that makes sense. So I hope that helps. I think that topic is getting kind of Bitcoin and cryptos are back in the limelight again here. So I wanted to spend a little bit of time talking about that. But definitely reach out if you guys have a question, anything, whether it's crypto related, something maybe more typical, whatever the case may be, let us know. And if we end up using your question in our question of the week, we will definitely send a copy on me to thank you for the great thoughts. So definitely reach out to us, and we will see you next Thursday, same place at 3 p.m.